interest received but not included in the cost book. In the interest rate, what will happen in the financial book goes more where the cost book is less. To make equal, add back. Under recovered, what will happen? Low charge. So profit will be more. Financial profit to make equal less. 5,59,000 feet, that is the cost of goods sold, and selling expenses. Production is 24,000 into 8, 1 lakh. These are all the units sold. Hello, my dear students. I am Dr. B.S. Subramaniam, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Cost Accounting, 3rd semester, Unit 5, Session 1, in favor of reconciliation of cost and financial account. We know we prepare the cost account, we prepare the financial account. We arrive the profit of financial account, we arrive the profit of costing records, and if there is any difference between the costing profit and reconciliation profit, we are financial profit. So there are two profits are there, one as per cost record, one as per financial record. Whatever the profit earned in the cost record should be equal to financial, or whatever the profit we earn in financial statement should be equal to cost record. If there is any difference between the profit, these two, that is as per cost record and financial account, we are going to prepare an account called reconciliation of cost and financial account. Find out what is the reason for difference between. We start, because we are a cost student, we start with the cost record, end with the financial record. If there is any difference between the profit as per cost book, profit as per financial book, we are going to find out what are the reasons, where we have gone wrong, why there is a difference. That is called reconciliation, making equal. Why there is a difference, we are going to find out. We will move on now. Agenda, problems and solution. Reason for difference between profit as per cost and financial statement. Why there is a difference? Number one, item shown only in financial account but not in the cost account. There is a difference. One example I will tell you. Interest credited in financial book. What will happen? Financial account raises no entry in the cost book. Cost book showing less profit, financial showing more profit. So that we have to make the reconciliation. Then item shows only in the cost book but not in the financial account. Under or over absorption of overhead, some expense, office expenses overcharge, what's called factory expenses undercharge. So that should be make equal. Different methods of stock valuation, closing stock, closing stock may be more, or closing stock may be less, opening stock may be more, opening stock may be less. Different cost method, rate of division adopted. It may be straight line method or fixed installment method or diminishing balance. So there is a difference. So that we are going to find. This is the reason where there is a difference between the cost and fine. Which are the reasons are item shows only in financial account, item shows only in the cost account, not in the financial account. When you say this word, item shows only in financial account means not in cost account. Item shows only in the cost account, we mean to say that it should be not shown in the financial account. Under or over absorption of overhead, that means factory expenses will be more charged in cost account, less in financial account, or more in financial account, less in cost account. So that will be dealt here. Different methods of stock valuation, there is a closing stock and the opening stock differences. Different cost method, that is rate of division adopted. So we adopt 10%, they adopt 20%. There is a difference between cost and financial account. So all this reconciliation will be made. We'll move on to the problem now. See, slowly we can see that from the following figure, prepare a reconciliation statement. Net profit as per financial book, 1,28,755. Net profit as per cost record, 1,72,400. So there is a difference. Works overhead under recovered in cost account, it says. So who charges less? work expended under recovered in cost. When they charge low charges, what will happen? Profit will be more. Profit will be more, whereas the under means profit will more in the cost account, less in financial account. We are taking the base cost account. What to do? Minus. This should be minus work recovery. Then administration overhead recovered in excess. We charge excess in or recovered word is always comes in the costing. Who charges more? Costing. More charges, less profit. Whose profit is less now? Cost record. Financial profit is more. To make equal, add back. Then depreciation charge in financial record, 11,200. Depreciation charge in cost book. Depreciation. Come back here. Charge in the cost book. In cost book, it is 12,500 in FB. Financial books, 11,200. So there is a difference of 1,300. Who charges more? Costing charges more. When it charges more, what will happen to profit? Profit will become down. Financial profit will be made. To make equal, add back 1,300. We'll repeat. Who charges more? Costing. Their profit will come down. Financial profit will made more. To make equal to financial profit, what to do? We add back 1,300. This over. Then interest received but not in your cost book. Interest received, what will happen to financial book? Financial book goes more where the cost book less than. We have to add back. Interest received but not included in cost book. Who received? Financial book. Not included. Well, what will happen to financial book? Will we go more? We go less. Obsolescence loss in financial account. What will happen? Their profit is less, our profit is more, minus. Income tax provided in the financial book, their profit has been come down, costing profit also be come down. Bank interest credited in financial book, what will happen to financial book? Will rise, no entry cost book less, to make equal, add back. Then deficient stock charge in financial book, no charge in the cost book, what will happen? Financial book come down or cost book is more. So you have to come down now. Store adjustment created in financial book, what will happen? It will go more, costing is less, add back. So here administration over recover in excess in costing. What will happen to profit? Profit come down, financial profit will be more. So to make equal, add back. Then this difference is add back. Then interest received but not included in the cost book. We receive the entries. What will happen to financial account will be goes more, but no entry in the cost book. So add back. So these are all the things we have to look after. Here see that depiction in financial book, cost book, there's a difference. Interest received but not included in the cost book. When the interest received, what will happen? Interest received but not included in the cost book. When the interest received, what will happen to financial book? Goes more where the cost book is less. To make equal, add back. Then obsolescence loss, deduct. Income tax paid minus. Bank interest credited in the financial book. Interest received but not included in the cost book. This is important point. Then income tax provided in the financial book. Bank interest credited in the financial book. Deduction of stock charge in financial, what will happen? Financial book will become down. No entry in the cost book showing more. Financial book come down, minus. Store adjustment created in the financial book. What will to financial book? Will be added, deduct. Now, we'll go with the reconciliation. Reconciliation statement. Particulars. Rupees. Net profit as per cost record. Net profit as per cost record 1,72,400. Add works overhead under recovery in costing. When you under recovered, what will happen? Low charge. So profit will be more. Financial profit will to make equal less. Administration recovered, excess recovered. Excess recovered, what will happen? Our profit will be come down. Their profit will be more. Add back administration overhead. How much administration overhead? 1,700. This is 1, 2. Then depreciation charge in financial account, depreciation charge in here. In the working note, we have done cost book financial 1,300. So excess depreciation. In cost book 1,300. Number 3. This over. Interest received but not included in cost book. When they are not included in cost book in the financial. So what will happen to financial book more where the cost book is less? To make equal, add back. Interest not charged in cost book. How much? 8,000. Number 4. Then obsolescence minus, income tax minus, then bank interest. Bank interest 750. Number 5. Store adjustment creditor. Stores adjustment. CR credited 475. Add 1,700, 1,300 plus 8,000, 12,225. Add 1,72,400 plus 12,225, 1,84,625 less works overhead. $3,120. Number 2, 3,120. Come back here. Obsolescence loss. OB, SO, LE, SC, ENC. Obsolescence loss 5,700. Then obsolescence loss 5,700. Income tax only in financial book. Income tax only in financial book. Then division of stock. $6,750. Add 3,120 plus 5,007. 3,120 plus 5,700 plus 40,300 plus 6,750, 55,870. deduct 1,84,625 minus 55,870. 1,28,755. 1,28,755. Profit as per financial book. So we started with cost book. So 1,72,000. Administration overhead over recovered. Excess division in cost book. Interest not charged in cost book. Bank interest. Store adjustment. All these should be added. This is your plus. Then less works overhead under recovered. Obsolescence not charged in the cost book. Income tax not charged in the cost book. Division of stock not charged in the cost book. So this is minus. So start with this, end with this. If you arrive, see that same answer has been come. So we have done correctly. So we started with the cost account. As a cost account, we started with the cost account, end with financial account. So 1,72,000 become 1,28,755. Hope you understand this one. We'll move on to next problem. Shankar Limited furnishes the summary of trading and profit and loss account for the year ended 31st December 2020. So here they have given the trading and profit and loss account. Then the company cost record for the same period shows that production overhead have been allotted to the production at 20% of prime cost. Second one, administration overhead have been charged at ₹6 per unit on unit produced. Selling overhead have been charged at ₹8 per unit of unit sold. You are required to prepare a statement of cost and profit and reconciliation statement. Now, first one, statement of cost sheet. Which year? 31st December 2020. Particulars. Rupees. Material consumed to material. What's the value? 2,75,000. We started with, you have to prepare the cost sheet. So material is 2,75,000. Direct wages plus direct wages. What's your direct? 1,56,600. Add 4,6,111,813,34. Prime cost. There is no direct expenses. What's your cost sheet? Direct material, direct labor, direct expense is the prime cost. There is no direct expense. Your prime cost is 4,31,600. Now, production overhead allotted to 20% of prime cost means factory expenses, production expenses, %20 of prime cost. So it is 4,31,600. 4,31,600 into 20 divided by 100. 86,320. 86,320. 45. 86, 20% of 4,31,600. Add 5,17,920. Then there was a closing work in progress minus closing work in progress. Now, what is your cost sheet format? Direct material, direct labor, direct expense of prime cost, add factory expenses, add opening work in progress minus closing work in progress. What's your closing work in progress? 96,000. Deduct 0. This is 2. This is 9. This is 1. This is 2. This is 4,21,920. This is your factory cost. Then this over. Then add administration expenses plus administration expenses. Administration expenses. What's your administration expenses? 6 rupees on unit produced. Your unit produced, here see that 24,000 unsold stock 400 means totally 24,400. 24,400 at what rate? At rupees 6. 24,400. 24,400 into 6. 1,46,400. 1 lakh, 6 fours are 24, 2. 6 fours are 24 plus 2, 26. 6 2 are 12 plus 2, 14. 1,46,400. Add 0. This is 2. 2, 3, 7, 8, 6, 5. So it is cost of production cost of production 5,68,320. Formula, add, this is the finished stock, add opening stock of finished good minus closing stock. Minus closing stock of finished goods. What's your formula? Cost of production total units produced multiplied by closing stock. What is the formula? Cost of production divided by total units produced. We can say here. Come back to working note. Closing stock of finished goods what's the formula? Cost of finished goods, cost of production, total units produced multiplied by unsold stock, closing stock. This is your formula. Come back here. What are cost of production here? 5,68,320. 68,320. What's your production? 24 plus 4, 24,400 multiplied by unsold 400. Apply now. 5,68,320 into 400 divided by 24,400. 9,317. 6.7, you can say 9,317. They should be applied there. 9,317 minus 5,68,320. I will explain this. 5,68,320 minus 9,317. 5,59,003. 5,59,003. Cost of goods sold plus selling expenses what's your selling expenses? Selling expense have been charged 8 per unit sold. Your unit sold is 24,000 multiplied by 8 rupees. 24,000 multiplied by 8. 1,92,000. Add 3,001. 7,51,003. Total cost. From here. Come back here. Particular rupees. What's your total cost? Total cost. Your total cost is 7,51,003. Profit. Leave it up. Sales. Your sales is 9,60,000. Deduct 9,60,000 followed by 30 minus 7,51,003. 208,997. So profit as per cost record 208,997. This you have to prepare like this. I will explain all these things now. This is as per the cost sheet. Now, reconciliation statement. Particulars. Rupees. Profit as per cost record 2,08,997. Add come back here. Same wages, same income. Production overhead. Production overhead. As per cost record, production overhead 85,200 financial book 85,200, cost book, production overhead 86,320, 86,320. We're showing more cost book 86,320 minus 85,200. So 1,120. We're showing more, cost book showing more, financial book showing less. So cost book showing more, profit will come down. Low means more. Add back 1,120. What is this? Production overhead. So this over. Administration overhead. Administration overhead. 1,46,400. Financial book 1,46,400. FB means financial book. CB means cost book. As per cost book, this is 1,46,400. As per cost book, this is as per cost book, not cost book. This is 1,40,000. Then financial book, admission 78,000. This is financial book 78,000. Deduct 1,46,400 minus 68,400. Who charges more? Cost book charges more, their profit will be less. Your profit. Add back 68,400. Last one. Selling expenses. Selling expenses 1,92,000. Cost book 1,92,000. Financial book selling 85,600. This is as per cost book. Financial book 85,600. Difference 1,92,000 minus 85,600. 106,400. Who charges more? Costing. Their profit will less. Our profit will be more. To make equal, add back. Plus. Then last one. Closing stock. Closing stock here 16,000. Closing stock. Financial book 16,000. Cost book here. Closing stock 9317. 9317. 16,000 minus 9317. 6683. So who charges more? Financial. Closing stock is more means more profit, less. Add back. Now you have to charge now. Add number one. Add. This is production overhead. What's your production overhead? Production overhead, cost book more, 1,120. Second one, this over. Financial charges less, costing charge, their profit more, add back. Administration. 68,400. This over. Then selling expenses. Selling expenses 1,06,400 plus closing stock closing stock 6683. Anything more? 1, this is 2, depreciation in cost book, closing stock, cost of product. 1, 2, financial book 68. 1120 plus 68,400 plus 106 400 plus 6683. 1 lakh 82 603. 208 997 plus 1 lakh 82 603. 3 lakh 91,600 minus less preliminary expenses plus interest on securities. What's your interest on securities? 12,000. $600 less preliminary expenses 5,000. Goodwill 4,800. Dividend 7,000. Dividend 7,000. Income tax 11,000. So here particulars rupees. This is 403 600 minus add. This is 5,000 plus 4,800 plus 7,000 plus 11 27,800. 27,800. 403 600 minus 27,800. 3 lakh 75 800. Profit as per financial books. See your financial record. So we'll go with now. Direct material 2,75,000. Direct wages 1,56,600. Add 4,31,600. Production expenses 20% of prime cost 86,320 minus closing work in process has been given 90. What's formula? Add factory expenses, add opening work in progress minus closing work in progress 96,000, deduct 4,21,019. That is the factory cost or production cost. Add administration expenses 24,400 into 6 as per cost record 1,46,400. This comes to 5,83,320. That is the cost of production minus closing stock. Formula: cost of production divided by total units produced minus closing stock. That has been working note now. As per the working note 9317, if we deduct 5,59,003, that is the cost of goods sold, and selling expenses, production is 24,000 into 8, 1 lakh. These are all the units sold. 24,000 into 8, 1,92,000. Your total cost comes 7,51,003. It has been sold for 9,60,000. Difference is as per the cost record 208,997. Now reconciliation. Profit as per cost record 208,997. Add that working note. Production overhead should be added. Administration added. Selling expenses should be added. Over closing stock. Over. So it will come 1,82,600, that is as per the working note. 1,82,603, add 3,91,000, add interest on security which is given in the what's called financial account, add back which is not recorded in the cost book, add back this 12,000, it becomes 403,600 less premier expense is not charged cost account, goodwill is not charged in the cost account, dividend is not charged in cost account, income tax not charged in cost account, which has been charged in financial account. So all should be deducted. It will work out 27,800. Out of this, the profit arrival is 3,75,800 as per the financial record. You have to see that it is perfectly pakka ho gaya. See that 3,75,800 we arrive the figure. So a little bit tough is there, but it's a good problem. It's a very good problem. We have prepared the cost sheet. We have prepared the reconciliation statement. Two problems has been passed here. One is normal problem, another problem preparing the cost sheet and reconciliation statement. It's a good problem. Better to go through 2 or 3 times. Definitely it will help you from the examination point of view. Hope we'll meet in the next class with another session. Till then, goodbye. Meet in the next session.